What is up, Bitcoin Bulletin crew? Get ready for a rapid-fire download of the biggest crypto stories hitting the headlines today. First up, Cboe Global Markets is set to redefine the U.S. trading landscape with the upcoming launch of continuous Bitcoin and Ether futures contracts, slated for November 10, 2025. This groundbreaking initiative promises to offer U.S. investors a way to engage with long-range, cash-settled futures, potentially changing how we interact with digital assets in a regulated environment. Next, we're heading to Tokyo, where Metaplanet is making massive waves with a colossal $1.45 billion share sale. This isn't just any share sale. It's a strategic move to fund significant Bitcoin purchases and bolster their treasury, signaling a major shift in corporate strategy for Japanese firms. Then, we're exploring the crucial question on everyone's mind. Is Bitcoin the ultimate hedge against economic uncertainty? We'll break down the arguments, hearing from experts like Tether CEO Paolo Ardoino, who are increasingly positioning Bitcoin alongside traditional safe havens like gold and land. And finally, the U.S. government is stepping into the spotlight with a new Bitcoin reserve bill. We'll dissect how H.R. 5166 is pushing the Treasury Department to create a detailed plan for how it will custody Bitcoin and other digital assets, especially those earmarked for the new strategic Bitcoin reserve. Stick around for all the details, and make sure you're subscribed and have that notification bell on so you never miss an update. Cboe's continuous Bitcoin futures are here. Get ready for a seismic shift in U.S. crypto trading. Cboe Global Markets is launching continuous Bitcoin and Ether futures contracts on November 10, 2025, a move that could revolutionize how American investors engage with digital assets. Forget the hassle of rollovers. These new contracts will align daily with real-time spot prices, offering a decade-long outlook and incorporating a clear funding rate mechanism that blends the benefits of perpetual futures, previously unavailable to U.S. traders. This isn't just an incremental update. It's a strategic play by Cboe to capture a significant portion of the crypto derivatives market, which currently sees perpetual futures dominating 68% of Bitcoin trading volume. By providing a compliant, U.S.-based alternative, Cboe aims to attract trading activities back to American exchanges, boosting liquidity and investor confidence. The platform is designed to appeal to both seasoned hedge funds and individual traders looking for innovative strategies within a regulated framework, boasting streamlined margin processes and reduced rolling costs. The crypto community and financial analysts are buzzing about this development. Many see it as a crucial step towards greater institutional adoption and a more mature, stable crypto market. However, there are also discussions about how this increased regulation might impact decentralized trading ideals and the broader Web3 ecosystem. Cboe is also investing heavily in education, with upcoming sessions on October 30 and November 20, 2025, to ensure traders are well-equipped to navigate these new instruments. This is just the beginning of how traditional finance is embracing crypto. But what does this mean for your portfolio? And what massive corporate treasury shift is happening in Japan? Metaplanet's $1.45 billion Bitcoin bet. Tokyo is buzzing as Metaplanet, a Tokyo-listed firm, just announced a massive $1.45 billion share sale, one of Japan's largest corporate treasury shifts ever. This isn't about traditional assets. Nearly all the proceeds are earmarked for Bitcoin purchases and income-generating operations, signaling a bold embrace of cryptocurrency as a core treasury strategy. Metaplanet cited elevated levels of national debt, prolonged real negative interest rates, and an ongoing depreciation of the yen as the driving forces behind their decision to begin acquiring Bitcoin in April last year. This move comes after a shareholder vote approved the issuance of new shares, aiming to stabilize the company's share price, which had seen a significant drop. The company currently holds over 20,000 BTC, making it one of the largest public corporate holders globally, even surpassing well-known names like Tesla and Coinbase. Experts like Dan Databeo from Unstoppable Wallet are highlighting this as a key signal that corporate Bitcoin adoption is spreading worldwide. Moving beyond the US, he predicts that with new accounting rules and ETF normalization, public companies could hold over 1 million BTC by year-end, with many treating Bitcoin as digital gold by 2027. This is all happening against the backdrop of BlackRock's Bitcoin ETF becoming its most profitable, demonstrating a clear trend of deeper integration of Bitcoin into traditional finance. Metaplanet's bold move shows companies are seeking stability in Bitcoin, but is it the ultimate hedge against global chaos? We're diving into that next. Bitcoin, the new gold standard hedge. In these turbulent economic times, the debate over the best hedge assets, Bitcoin, gold, and land, is heating up. Tether CEO Paolo Ardoino is making waves, championing Bitcoin as a powerful alternative to traditional safe havens. With inflation soaring and geopolitical tensions rising, investors are urgently seeking ways to protect their wealth, and Bitcoin's unique properties are putting it squarely in the spotlight. Ardoino highlights Bitcoin's scarcity, with its fixed supply of 21 million coins, as a major advantage in an era of rampant money printing. He argues that Bitcoin is essential for any diversified portfolio, offering a deflationary hedge against global political strife and market volatility. While gold has long been the go-to safe haven, its stability and tangibility are now being matched by Bitcoin's growing appeal, creating a compelling case for a combined approach to wealth preservation. The idea is to blend Bitcoin's liquidity with gold's enduring reliability. Beyond digital and precious metals, Ardoino also points to land as a robust safeguard against market unpredictability. This perspective underscores the need for a well-rounded asset allocation strategy that includes both liquid and appreciating assets like real estate. The crypto community is taking note, with many shifting from pure speculation to seeking genuine financial security through these diverse hedges. This trend signifies a growing maturity in the market, where Bitcoin is increasingly viewed not just as a speculative asset, but as a fundamental tool for navigating economic uncertainty. While Bitcoin solidifies its role as a hedge, the U.S. government is also taking a serious look at its own Bitcoin holdings. Get ready for what's happening in Washington. U.S. House bill demands Bitcoin custody plan. A significant development is unfolding in Washington as the U.S. House Appropriations Committee advances H.R. 5166, the Financial Services and General Government Spending Bill, for FY 2026. This bill includes language that would formally direct the Treasury Department to outline a comprehensive plan for the custody of federal digital assets, with a specific focus on the newly created Strategic Bitcoin Reserve and the U.S. Digital Asset Stockpile. Section 138 of the bill mandates that within 90 days of enactment, the Treasury must present a public plan detailing the secure and efficient custody of these digital assets. This plan needs to cover everything from custody architecture and legal authorities to cybersecurity controls and interagency workflows. Furthermore, Section 137 requires a report on the feasibility of establishing the reserve and stockpile, addressing potential barriers, and how these assets will be reflected on the federal balance sheet. This legislative pressure comes 6 months after the White House Executive Order 14,233, which consolidated government-owned crypto seized in criminal and civil cases, stipulating that Bitcoin in the reserve shall not be sold. This move signals a new era of transparency and strategic planning for government-held Bitcoin. Lawmakers are emphasizing strong safeguards against loss, unauthorized access, or liquidation, even directing the Treasury Secretary and NSA Director to provide a classified report on interagency coordination. While the bill doesn't directly appropriate or purchase Bitcoin, it sets clear reporting and planning obligations, pushing the Treasury to move from ad hoc practices to a defined reserve posture. The success of this bill hinges on clearing the full House, the Senate, and reconciliation before it reaches the President's desk. That's all the news you need to know for today. But before you go, let's do a quick recap of the biggest stories. All right, Bitcoin Bulletin viewers, that's a wrap on today's explosive crypto news. We saw Cboe Global Markets set to launch continuous Bitcoin futures, Metaplanet making a massive $1.45 billion bet on Bitcoin, and Bitcoin proving itself as a go-to hedge against economic uncertainty. Plus, the U.S. House is pushing for a clear Treasury plan on Bitcoin custody. If you found this update valuable, smash that like button, subscribe to Bitcoin Bulletin for more daily insights, and ring that notification bell so you never miss out. Follow us on all social media platforms for real-time updates and join the conversation in the comments below. We'll see you next time.